Hello and welcome to Quick Take TA here on Landy's Crypto Corner. Today is July 31st, 2024, but Bitcoin has already closed the 31st candle and is now trading in the month of August. So we do have a monthly close to look at here on today's Quick Take. And first, we're going to talk about what Bitcoin's doing right now, though, on the daily. So last we spoke was on Monday. Bitcoin had just put in this closing high here that closed below this first major lower high of the range. Now, we did have lower highs prior in the context of higher lows. This was the first lower low to lower high here at 67,300. Bitcoin closed back below there, making our downside safe zone the next target. We did see that area hit on Tuesday and then closed in on yesterday's, or today's still for me, Wednesday's candle. Now, the Thursday candle has actually already moved to the bottom side of the zone at $64,000. So this safe zone is $65,500 to $64,000. You can see that the candle is kind of oscillating around $64,000 right now. If we do see this area lost, pay very close attention to the uptrend break line here at around 63,200. If we do see that area close below, there's a little bit of support here around where this low is coming in at $62,000. You can see that that is swinging right across these highs of this consolidation off of the risk zone. And we see the lower high here at 62,800. So between 62 and roughly $63,000, you could even call it that 63,200 as well. We need to see Bitcoin closing above there. Otherwise, I would be looking for $62,000 and below. So this low over here down to $60,000, and that is the top side of the risk zone on the daily chart here. I'm going to tell you, bulls, you don't want to see $60,000 given up. So if we do see that area lost, then I would step it down one more to the top side of the danger zone, the top side of the danger zone, even at 58,400. You could even call it 58,300. It really doesn't matter. It's a $100 difference down here. This is just happens to be marking the wick low here of one of the major lows of the prior downtrend before continuation to the lower low. Now, 58.4 is definitely going to be a critical level if you did see Bitcoin get there. But again, Bitcoin's all the way up here in the safe zone still, kind of oscillating in and out. What I'm looking for here is if Bitcoin meets the condition of breaking down from $64,000 on the daily and then subsequently breaking down from 63,200 or so. Now, if it does that on the daily, then we are definitely looking for some lower price action, certainly around 62, fair game, down to that 60. And then we come back to it and see how price reacts in that area if it did get there. Now, to the other side, if the bulls can regain the top side of the safe zone even, I'm having a tough time talking today, my apologies. If the bulls can recover the top side here at 65,500, then I would look right back to this green line here to test the prior downtrend. This was, this was the breakdown of the highs here, and that sent price down into its downtrend here. The first major lower high up here, and then the lower low, lower high area was right off of that 67,300. So, above 65.5, I'm looking at 67,300. Above there, I'm looking to our run the highs zone above here at $68,000 to the current moves wick high at $70,000. So, we were talking about this quite a bit, last week leading up to $68,000 as $68,000 to $70,000 being the target. And of course, Bitcoin respected our target there and hit $70,000 exactly. Now in this case, can Bitcoin swing down below the uptrend break line? Yes. It can grab liquidity below there. You just really don't want to, bulls don't want to see closes below there. You don't want to go down that road, trust me. But let's look at a few other things here on the daily. So, we do have a downtrend, or I'm sorry, an uptrend break. So, a downtrend could emerge from here on the daily, but more likely if it sticks around in this area, we're looking at sideways price action. So the close from yesterday did come in at 64,500, so it did get a lower low close than the prior higher low. So we do have a downtrend possible from here if we were to see a lower high. As it stands right now, this is just a closing trend break, and Bitcoin is still hanging out within the swings or the wicks here. So it's not fully in the cards yet that this is destined to go lower. But of course, if we do see closes below there, then yes, then it's a full-on legitimate downtrend, uptrend break, and downtrend could be possible from there. Make sure I say that right. Be a full-on uptrend break, not just on a close, but also on the swing. And then we would be looking for a possible downtrend to emerge from there into some of those lower targets. Now, back above the $68,000 to $70,000, if Bitcoin were to meet some of the criteria, of course, closing at least medium-term timeframes on like the 4 or above 65.5, then we look to that 67.3 and then $68,000 to $70,000 above there. I'm looking at it as a zone kind of in between this gap here, between 70,000 and around this high side structure here on the daily double top on a wick basis here at $72,000. So 70 to 72, and then above there around 73 to 75. So that would actually encompass the all-time high over here at 73,835. But I want to be very specific. I would be looking for the highs to get ran and higher. So roughly a zone of 73 to 75. And then we come back to it from there for a zone of around 75 to 78, and then 78 to 80, and then mid to low 80s from there. So that pretty much covers it. One of the risks that is still on the board here, I will let you know when we look at the monthly. Might even check on how this looks on the weekly because it's not going to be pretty. But when we look at the monthly in a moment here, we'll see why we don't want to see $60,000 breakdown. It's pretty important actually for the bulls here, at least by the end of the month. You don't want to see it breaking down. The daily momentum is pivoted at 69,200. So again, right in the run the highs zone again, right back around the highs. And it's interesting because I think we saw RSI throw the bearish divergence. We did talk about that. It was fully in play. The easy move was already underway. And now it's the extension of that bearish move from the actual bearish divergence here. But we can see that the bullish control zone is actually this right around the same number as the Stoke pivot around that 69, 100 to 200 area. So, Bitcoin right now looking like it wants to head down some more. So let's go ahead and get it doesn't necessarily have to do this, but let's go ahead and take a look at where the bearish control zone is coming in. And that's going to be 60,400. Well, hey, that just so happens to be the top side of our risk zone here. So that is around 60,263. So, not far off from the actual top side of the risk zone. So closing in there is not preferred by the bulls, but it's more about closing under that risk zone at 58,400 down here. Top side of the danger zone. That's where things really get dicey for the bulls for a little while. Let's go ahead and take a look at that monthly. And we're actually going to use a different chart now that I think about it. Let's go ahead and take a look at the monthly on the index. And we'll put on the Bollinger Bands in just a moment here, but we can just look at pure structure. This still looks like a monthly bull flag. There's nothing really crazy here. This almost looks, it could be a broadening wedge. All the different patterns you want to draw on it really doesn't matter. It's shaping up to be bullish unless we see daily distribution, which would be basically any closes below 53.5 or the wick low on the monthly here. Then we would be looking for probably substantially lower prices into probably this monthly zone over here at around 45 to 48, 240 or so there at that first big lower high that kicked off the bear market there on the monthly. Let's go ahead and support that with throwing some Bollinger Bands on here. So this is just kind of gauging volatility. And we can see that the upper first standard deviation is at right now at 59,650. So This will oscillate ever so slightly with price. When the monthly opened, it was $60,000 because Bitcoin was trading, closer to 65.5 than it was, 64 in this case. So you will see it slightly move around as price action moves up and down. But essentially, because Bitcoin, has closed quite a few monthlies, now 3 monthlies below the upper second, we have a volatility zone of interest. So this is going to be different than the actual support and resistance that I'm pointing out, like I did at the beginning of the video on the daily. But this lends confluence to those areas from a volatility perspective. And in this case, the upper first is right there, right around the risk zone that I had on the other chart here. So if we just go and look at this chart, we can see that it's a mess, but on the monthly, you can see the upper first stuck in here, right in between the 60,300 and 58.4 is the monthly upper first. So it's not abnormal to see Bitcoin tag the monthly upper first, even multiple times. What I will tell you is, though, this is quite an extended consolidation on the monthly. We need to see monthly lows set on closes from here. That would be on any close back above the close open all-time high now here at, that's going to be 71,320. It's still got to get above the wicks here at $72,000 and take out the all-time high to move up to the upper second from a volatility standpoint, which is, kind of above my first daily range of 73 to 75. It's in between 75 and 78, coming in at right around 76,700 or so, almost $77,000. So, it's like right in the pocket of a fib area that I've pointed out in the past. Not going to get into that today, but maybe if anybody is interested, I can chart it out and show you the fibs. Just understand that there's multiple confluences when I am referencing this stuff. So it's not just the Bollinger Bands, but it's also pivots and like all kinds of stuff. In fact, I think the monthly pivot for stochastic momentum, again, this is a regular Stoch, not a Stoch RSI. You see a lot of Stoch RSIs. I already use an RSI. I don't need an indicator of an indicator. Stoch RSI just measures the velocity or the speed of the RSI. And in this case, you could just look at the RSI and see which direction it's headed and how many legs it's taken down on the chart there. But in this case, I use a regular Stoch, which is measuring close over close price momentum. And you can see that the actual Stoch pivot is 71,300. So it is the actual all-time high on a monthly closing basis now. So that's also the area that needs to be closed above on the monthly to set this as a monthly closing low. And of course, we would see a lot of indicators fire off a closing low, but I would call this swing low set above last month's high here at $70,040. It's $70,000 on the Coinbase chart. That's where you'd see the actual swing low set here. And then we would be looking for confirmation on any closes above 71,300. So basically get a pivot turn on the monthly for Stoch, and then also set a low is what the bulls want to see by the end of August. If we did see the upper first lost, the lows, the lower low on the daily area there at 53,500 is fair game. From there, we're looking to the monthly here at around $45,000 to $48,000. That is that bear market lower high, that big first lower high on the monthly. And it did actually lock the swing and the close in all at the same time in April of 2022. So that was telling us we were at minimum going to go test. Excuse me, at minimum going to go test. Man, I can't. Hold on just 1 second. Sorry about that. At minimum, we were going to go test the lows and lower into supports, and we sure did. We didn't hit that support, though, at 13, and it was technically 12 to 14, but some exchanges actually did get there, but everybody's looking for that $12,000 target, except, Ian and our TA group over here. So one of the other big things that I want to note about the monthly, and I wanted to see this close before I talked about it, but right now the last lower high in a close is down here at this 25 to $26,000 on the swing and the close. So, at minimum, I'd be looking for higher lows on the monthly, even if things started to distribute on the daily. And I think that would actually be a good thing for those that want to see much, much higher prices and a much longer bull run. But I want to point out a few things here that are occurring a bit differently than in the past. I'm going to zoom out on this chart. I'm going to keep these bands on. And I want you to note the lower bands. So I'm just going to kind of use my cursor here to point out a few key things here. Whenever Bitcoin breaks out to the upside, you'll see that the lower bands run right off the screen. We have the lower first in gray. That's that band. And then we have the green zone to teal there. That is the lower second. And then there's purple down there somewhere in the first one. That is the lower third. And when Bitcoin starts to get its real expansive move, its blue sky breakout, you see those bands just shoot right down. It stays that way for as long as that expansion goes on. Then we see the compression. We see the bands come back. We see the compression, re-expansion. All the bands shoot down. The lower bands do, while Bitcoin is trending above the upper bands. And we had a few things that did not play out that way in the bear market section of 2022 into 2024 now. So we see that in 2020, we saw the same kind of thing when Bitcoin started to close above the bands, the upper bands. We see the lower bands shoot all the way down off the screen. And then we have the bands, the lower bands shooting down, at least the lower third shooting down off the screen. In the context of Bitcoin, for the first time in its history, tagging the lower second standard deviation before putting in the lower low of the bear market and then moving on to lower high, higher low, its way back to where it is now. Now, in what we see here is Bitcoin started to get its lower third expansion down, just shooting off the screen. Its lower second has not followed through. And in fact, we see the lower second just chasing now. So Bitcoin hanging out above its upper first, basis nice and pointed up and around the 2 o'clock direction. Very good. That is a 20 simple moving average, by the way. That is what the basis is. We see the lower first also moving up, indicating that this is now a normalization of volatility in the market. And I've talked about this in the past, but this is very important because this lends to my macro thesis that I've talked about for a very long time, all the way back when some of you very first met me in these markets in the TA from my TA perspective. And we're going back to 2020 into 2021, where I met many of the people who are in my TA group, online at least. And in this case, things were changing. Structure was changing over here. Bitcoin, when it came down, because its last higher low was technically just a swing high to swing low over here, it had to put in another higher low, and it did so. And then after trending outside of the upper bands, came back up and perfectly tagged the upper second. This was something that we were watching very closely at that time. After it did the Wyckoff reaccumulation, then hit the spring on the daily, we did see this tag the upper second, and everybody else was looking much, much further up. We were not. And then we noted that, if things, if it loses the basis band, we're looking to the lower first, but look at how fast it's moving up and where it is at that time. It was actually right around the actual higher low of that bull market in 2021. And Bitcoin broke down to the lower second and then even went sideways and down further, which was something that we have not seen because there's, it has to populate its history. And we did not see that same type magnitude, I should say, for the move up. Now, if you were to aggregate the initial pump off and you ignore this wick here, yeah, you had two pretty big moves up in a higher low fashion in the bear market as well. And then we have two, possibly big moves up here. So we have this move up and then this move up. Now, what does this mean? To me, when we look at the quarterly, this means that we're still in a compression on the quarterly. And I just want to note those lower bands. Now, the quarterly doesn't have nearly as much history. So what you see here is very short history, and then we get the expansion on the quarterly. We see the lower first shoot down. We get a little bit of compression on the quarterly again, band shoot down. And then we are just in this macro wide range, and we're still in a quarterly compression. Yes, we see volatility ticking up. Yes, from the perspective of the quarterly, we have, things, kind of normalizing on the lows here. Closes above 38,682, going to look fine on the quarterly. So it's really about, it's it just lends confluence to Bitcoin ticking to its own clock now. And it's probably going to continue to do so. And the longer it consolidates, the bigger the move's going to be. And I'm going to leave you with this. If some of the worst of the downside were to occur, which, Bitcoin's trading around $64,000, unless we see it breaking down from trend. And in the context of, where the Bollinger Bands are right now on the daily, lower first, we'd be looking to the lower second. That's right around our $60,000 risk zone. In the context of an expansion into a compression phase on the bands too, as the bands compress into price, and especially when they line up with areas of support and resistance, like the lower first right here at the uptrend break line at 63,200. And we're looking for those areas to act as support. Same for the lower second, which is slightly above the $60,000 level, but it's really right around, that in between that $60,000 and $62,000 low over here. So one of the things that I did want to point out, and I'll take the bands off the screen so I don't assault your eyes anymore with it. But what's going on here? Why is it acting like this? Oh, you know why? I know why. That was my mistake. All right, so just to gameplay this out real quick, and this is kind of where I'm going to leave you off with, and we'll follow up on Friday. But even if Bitcoin was going to go and redistribute back down, it gets below our $60,000 level, which is also the upper first on the monthly, right around that $60,000 level. It's coming in right in between the 58.4 and $60,000 level. If it was to take that area out on the daily, I'm looking for daily distribution into reaccumulation. And that's where we would go and retest, the 56,500 and probably the lower low here into target one of distribution between 50 and 53. Of course, this is a big weekly level for those who have been tracking this stuff. It's a big weekly level from 2021. And, we also saw this tested earlier this year. So that historical area was tested as resistance, again, as support. That'd be the first target. And then the next target would actually be that big monthly at 48 to around $45,000. Now, this relates to one thing that I will follow up with, but I'm going to tease you with on, I'll follow up with this on Friday, but I'm going to tease you right now with this one. And that is the Caprioli Bitcoin cost chart. I had mentioned this on Monday, but we have seen the sharp decline in electrical costs. That's because the blocks aren't being really heavily competed for on the network right now. So we get electrical costs falling, which means that miners are going into capitulation. We saw that capitulation end the other day, late last week, I believe. And, price and production cost is above the total production cost. And of course, the electrical cost and the total production cost are linked when electrical cost falls, so does total production cost. Well, we see the sharp decline, and now we're seeing it head back up slightly to 43, almost $44,000 here at 43,868. But even last post halving, what did we have? Blocks not getting filled, not very competitive on the network. So difficulty goes down, electrical cost falls, production cost falls. We see Bitcoin pop up above it and then retest into the top side of it. Where's the top side of it right now? $62,000 essentially. 61,800. Might as well just call it 62. Because I don't know if this is taking index or spot, and I'm tracking the spot chart. So in this case, we can see that the other time prior to that, the halving in 2016, we saw it riding the electrical cost all the way up, but you see electrical cost was increasing. This is because they were filling blocks and difficulty was increasing. So Bitcoin, even though it was in a capitulation phase, riding the electrical cost up was something that we actually expected at the time. It did spike above it. What did you see? You saw two legs down in the electrical cost because we had some shakeouts. We had two major shakeouts in the market here. Big spike up. Electrical cost falls. Bitcoin then retests production cost before going on its run into 2017. Same thing here. Electrical cost drops sharply. Bitcoin pops up, retests into production cost before it goes on its run. So nothing too crazy. I do want you to note that topside production cost zone is right there at around $62,000, and electrical cost is starting to crawl its way back up, and likely would end up in like the target 2 zone of interest at around 45. This technically is 45.5 on the close, but you give it room. 45 to 48 is as a general target 2 reaccumulation zone, and then I would come back to it. That would be worst case scenario. That's not what I'm looking for right off the bat. Bitcoin's trading in the middle of the range, so you got to give it a chance. I'd be looking for a sideways price action if it hangs out here, and then possibly testing up later. Just watch for any closes below 64, towards that 63,200, and any closes above 65.5, and you can start looking up to 67.3 and then above. All right, you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. With all that said, Landy out. I almost forgot to say my whole spiel there at the end. Take care. I'll talk to you on Friday.